Hello and a very warm welcome to all the viewers of Crypto TV. This is Manoj Dara. So crypto markets are in turmoil. Liquidity has dried up with the central bank's hiking rate, due to which trading activities in cryptos has fallen and so have their prices. Market participants believe that the primary reasons behind the present crash are macroeconomic factors and weak global cues that are also weighing stock markets down globally as a result of the global market shrunk to $1.23 trillion from $3 trillion. So to discuss the reasons that are responsible for the fall in cryptocurrency markets and road ahead, we have invited two special guests. Let me introduce you to Sharat Chandra, Vice President, Research and Strategy, Earth ID. Sharat, welcome on Crypto TV.
Thank you, Manoj. Thanks for having me.
And our second guest, Mr. Samrat Kishor, Regional Head of Enterprise Ethereum Alliance. Samrat, welcome on Crypto TV.
Thank you, Manoj, for having me again.
All right, so my first question is to Sharat. Since we are discussing about the broader concern in the cryptocurrency market, we have seen the markets slowly and steadily coming down because of few reasons. Can you just explain to our viewers why this cryptocurrency market is in concern and what are the reasons behind it? If you can just begin with, sir.
Sure. So if you look at the correlation between equity and the crypto markets, so the 90-day correlation between equity and Bitcoin is at an all-time high. It's as high as I think 4.9. Now, this is one factor. So there's a strong positive correlation how equity markets are moving and how they are responding to global macro events, beginning from the Russia-Ukraine crisis to Fed tightening the quantitative rates, right, and also hiking interest rates. So, and if you look at inflation, so we are witnessing a decade high inflation, right? 4-decade high in US. If you look at India, we have CPI index number as high as 70-month high, right? Exactly. So inflation is also one of the biggest drivers. So what investors are doing, they are trying to move their assets away from high growth or tech stocks or from crypto to a more assets where there's some sense of stability, let's say commodities for that matter, gold, right? And the way commodity prices are also going up, it's another reason why investors are taking their assets away from risky assets like crypto to commodities. That's one more reason why investors are kind of looking for more safe haven towards commodities and gold rather than crypto.
So Samrat, the first reason is money moving from the risk assets to somewhere it is safe. So what's your opinion? What's your opening remarks on this?
No, definitely. I think Sharat gave, he kicked it off very well with the statistics. That there is definite view that investors are wary of riskier assets. There are a lot of people whose the risk appetite, the risk capital that they used to allocate towards various parts of the portfolio, that has gone down. So I think that's one reason. And let's not just talk about retail investors. If we were to also look at institutional investors, even they are very wary of returns that they can potentially generate from, let's say, crypto markets. There's one more statistic which I was seeing when I was studying the correlation of the two markets. I think one thing which was really intriguing to see is a lot of people are now also taking deliveries of commodities, like for example, gold or silver. People don't just want to invest in futures and options; they also want to take deliveries, which means that they see that they're probably going to lock the investment in for quite some time, and they still want to get returns on their investment. So they want to take deliveries and keep it somewhere safe.
All right. So few keywords I picked from this opening remark is higher interest rate, rising inflation. Yeah. And a higher correlation between the cryptocurrency market and the stock market. So moving on, there was one event which has disrupted the entire mood, or for that matter, the entire cryptocurrency market was under concern, was the Terra Luna episode. So Sharat, when we speak about this stablecoin Terra USD, which has lost its peg, and it has actually exposed the destability in the concept of stablecoins. So what, according to you, is your opening remarks on this event, on this black event rather, which has actually disrupted the market mood, and from there markets have never risen. So what's your opinion on this, Sharat?
Right. So I think we have to take into cognizance the different types of stable coins, right? So when you look at stable coins, they're fully collateralized or fully backed stable coins, like say USDC for that matter, and algorithmic stable coins which don't have any underlying backing. So the pegging or peg to the US dollar is backed only by, or let's say driven by the algorithm, right? Now, if you look at Terra Luna, right, so there's a history behind Terra Luna. So the founder of Terra Luna, DogeCoin, was also associated with Basis Cash, a failed project, right, a failed algorithmic stablecoin project. Now, we have also seen multiple failures of algorithmic stablecoins. So there's one stablecoin called Iron, where one of the prominent Shark Tank investors, Mark Cuban, he lost his money there. So we have seen that these crypto, let's say, entrepreneurs, they're not able to get the algorithm right. So what I would like to state that algorithms, it's just a matter of time. If you get the algorithm right, we might see a very fruitful or feasible stable coin in the near future, because we are already relying on different algorithms for different purposes. We use algorithms for even video KYC, right? You do liveness checks, right? So we can't dismiss algorithms, but it's just a matter of time whether the crypto industry or crypto or tech entrepreneurs can get the algorithm right. Now, what happened in case of Terra Luna was 3 major trades led to the depegging of Terra Luna. So it started as early as May 7 when Terraform Labs, they moved close to, I think, 150 million of USD from 3-pool exchange. What happened after that? There was a second big trade where I think close to 85 million worth of USD was also withdrawn. So this led to a more vulnerable situation when it comes to pegging of USD. And then there's a massive sell-off, right? So, and again, both prices of Luna as well as USD collapsed. So that was one of the major reasons. And now when this crisis happened, it was also kind of coupled with the ongoing Russia-Ukraine crisis. Fed was already announcing interest rate hikes, right? So it was all a cumulative effect, and which snowballed into a bigger crisis of Terra Luna crash, which also led to further fall of Bitcoin prices.
So few keywords.
Combination of many factors.
Yeah, please go ahead, Sharat.
Yeah, what I'm saying, it was a combination of many factors, starting from how some of the whales manipulated the prices of Terra Luna, led to the exodus of USD from the main pool, and again, major sell-off, and then the crisis which followed.
So, Samrat, few keywords I have picked from what Sharat has explained about the entire Terra Luna episode is manipulation, multiple factors behind the fall, Russia, Ukraine, and to add to what Sharat has said, that we have seen roughly around 80,000 bitcoins being sold by this universe to just to protect what they have promised. So, what's your opinion on this?
No, Manoj, I think Sharat has pretty well articulated what events led to the crash, and I totally believe. In fact, I was talking to somebody the same day when it was all happening. It was all unfolding in front of our eyes, and I said, "This looks like it is orchestrated. You know, there are people behind it, and who've got clear intentions of doing this. What is happening? So it was not an incident, for sure, as far as my understanding was, and honestly, this is all just my research and my opinions which I'm expressing here. So it's no institution is behind it. But then, so that's one. And let's also talk about a little more bit of future. Since you said, is it a collapse of stable coins? So I would definitely say it is not. It's a concept which is much more worthwhile. It is much more firepower than just one algorithmic stablecoin collapsing because of some people ganging up together. So, as Sharat also pointed, there are these different kinds of, stable coins. You could look at asset-backed or even fiat-backed stable coins. There are fiat-backed, stable coins as well, where, you have cash or cash equivalents, which are backing the crypto tokens. Or I've even worked with projects where, gold is backing those crypto tokens. So their value is as fragile as gold value, and gold value will not have very wild moves like the crypto world. The cryptocurrencies, which are, so it's still a much safer bet than going into, say, for example, a meme coin. You go to Shiba, you go to DogeCoin. It's much stabler than that. Much more. There's higher degree of confidence on stable coins. I would still say that for just for the investors. I mean, but as it is true for any cryptocurrency, it could go up, down, sideways. Who knows? Totally depends on what's the market sentiment, what are the whales thinking about that particular token, and yeah, I think that's where it is. So I would say I would still not lose my trust on stable coins. I have not changed any of my holdings after this incident.
All right, no change in the holding, Sharat. That's what Samrat has mentioned. But few things which I picked up is he has suggested that the stable coins can be backed by gold. That is what the safest thing is. So one last thing on this segment on stable coins is how can such incidents be avoided, Sharat? If you can just highlight that.
Right. So I think that's where we have to look at what are the reserve assets and be transparent about those reserve assets.
All right.
So if you look at other stable coins which kind of depegged during the Terra Luna crisis, so I think DAI also depegged, right? And DAI also depegged, and similarly, there's one more stable coin. I'm not getting the name right, but if you look at Tether for that matter, Tether, right? Tether, US dollars, right? USDC. So Tether is fully licensed or federally licensed by the US authorities. So if you can license or let's say regulate stablecoin issuers the way we regulate banks and impose the same levels of due diligence checks, right? So that they have the same kind of reserve assets, the way banks are supposed to maintain cash reserve ratio, right? So look at the reserve assets, look at the quality of reserve assets. So if you look at USDC, right, they are saying that they have the most liquid reserve assets in terms of short-term US Treasury bonds, which you can easily convert into liquid form of money. Yeah. So that is one aspect. And now let's not write these stable coins off. So let me quote some of the global references where Japan has already initiated a stablecoin bill where they're looking at how they can ensure investor protection and how they can mitigate financial stability risks. If you look at Australia for that matter, so ANZ Bank has launched something called AUD or Australian dollar-backed stablecoins, right? In UK for that matter, the Chancellor, Rishi Sunak, he announced that he will include stablecoins in UK's payment regulation. So stablecoins, fully collateralized, fully backed, or fiat-backed stable coins definitely have a future in terms of promoting innovation in payments, right? Because they can ensure real-time settlement of payments, right? So stable coins do have a future. Algorithmic ones, we are not there yet. It's just a matter of time if some entrepreneur gets the algorithm right. If you get that right, that itself will lead to so many, I would say, possibilities in terms of payments, DeFi, financial inclusion.
So Japan, Samrat, Sharat mentioned about Japan, Australia and UK, and he has also recommended about fiat-backed stable coins. What's your view on that?
Definitely. I mean, as I just said, the degree of confidence just goes up and down with, what is the real underlying asset which is backing that particular stable coin. I think with algorithmic stable coins, I would just say one thing. It is like the seatbelt. It is like aviation safety. There's one crash and then there's, we learn something out of that crash and then we do things better. So it's considered something like that. The whole crypto market has actually learned and evolved in that fashion, over these 10, 12 years of history. So I think this is just going to go a long way. I mean, you remember the days when, the big, what was that exchange called? Sharat, do you remember what was that first exchange called, which collapsed on Ethereum?
Quadriga exchange.
Mt. Gox.
Mt. Gox.
All right.
So there was this Mt. Gox thing, which gave us a lot of learnings, how smart contracts could go wrong. So
apparently that Mt. Gox ka wo kuch wahan par in log ne, they have also found out that those who have stolen.
Oh yeah, I mean that's a different story altogether. Eventually in the crypto world, you get to know where the money has gone. You just don't know who the people are behind it. So it's easy to track, where it is flowing. I think, but what I wanted to say is definitely we're going to come out of this stronger. And as Sharat said, some entrepreneurs are going to figure things out. I think it is just about more public scrutiny. People just hear our name, stablecoin, and they just go behind it blindly. They don't consider it. They don't consider types. So I think the investors need to be more educated and informed about the various types of stablecoins. What is the real stability, quote unquote, stability behind that token that needs to be very closely looked at.
Fantastic. As moving on to the other topic, we are talking about Bitcoin dominance, Sharat. So although Bitcoin's market share fell by roughly around 20% in 2021, and investors began to look at other alternative assets, such as alternative investments in cryptocurrencies such as Ethereum, Solana, and Polkadot. So BTC remains the most heavy crypto assets. So even in the midst of falling crypto markets that has seen multiple altcoins decline in the value recently, BTC dominance has increased from 41% to in March itself. It's the highest level since November 2021. So will this dominance continue? If you can just highlight that, boss, because if BTC is gaining back its mojo, that means it's a positive for the entire cryptocurrency market. What's your opinion?
Right. So I think BTC dominance, in my own personal opinion, will continue, and that will be the major driver of, let's say, another bull run. We might be a couple of months away from the next bull run, but BTC dominance will eventually lead us there. And why? I'll give you some other not directly or relevant factors why we have to look at BTC in terms of payment as well. If you look at, there's a concept of Lightning Network or layer 2 solution of enhancing Bitcoin payments. And let me give you one more statistic where in US, close to 10 million crypto cards are being used, and most of them are using the Lightning Network for making faster payments, especially in US. So Bitcoin, in terms of, there's a wider criticism of Bitcoin that it's not scalable enough, but layer 2 solutions like Lightning Network are making Bitcoin adoption more mainstream in terms of payments. So that will also be one of the major drivers in kind of pushing the dominance of Bitcoin forward.
So Samrat, lightning speed is something which Sharat has highlighted, which is actually the key for the success.
Yeah, totally agree. I think so. The first thing is it will regain dominance for sure. I think I said the same thing in the last episode as well when we were talking, which is two things. One, people moving away from relatively more riskier assets into now liquidating their riskier bets now into back into Bitcoin, and just sort of looking at it from an investor's perspective that I'm still in positive. If I entered Bitcoin at the right time, then I'm still in positive because Bitcoin has still held a very, very high level as compared to where it is coming from. As far as the the Lightning Network is concerned, I totally agree with this. It is going to push retail adoption to the next levels. A lot of companies are now also looking for ways to hold Bitcoin on their balance sheet. I think so. So it's a mix of many things which will lead to dominance of Bitcoin. You also asked me that question about whether it is going to beat Ethereum. I remember having answered that question that not in the next 10 years. so yeah, definitely it's very different, and the utility of these two are very, very different. So I just that's how I see it. Yeah.
All right. So Sharat, one follow-up question on that. What are the important tech events in the cryptocurrency universe you are tracking? If you can just highlight a few of them for our viewers, so that they can this will help them make important investment decisions.
Right. I think the major one is Ethereum's movement from proof of work to proof of stake, Ethereum 2.0, and the testnet merge happened successfully. That will also lead to a wider debate about, let's say, layer 2 solutions and then what will be the role of Ethereum 2.0. So let me maybe shed more light here. So we can't, so Ethereum is going to be the default settlement layer for financial services.
Fantastic.
Or for the internet. That's my personal belief. And these layer 2 solutions will have their own space. They will not be able to kind of chip into Ethereum's dominance because Ethereum will be the underlying settlement layer. Now, when it comes to layer 2 solutions, let's look at, let's say, Polygon for that matter. So Polygon aspires to be the building block or AWS for Web3, right? But we might see newer protocols coming up which will solve up different scalability challenges, right? So when you look at scalability, there's a concept of roll-ups, how you can roll up multiple transactions and then commit to the block. So there's a wider experiment going on there, innovation going on there. But Ethereum's dominance will still be there, and maybe Samrat can come in and throw more light on that. Why will that be?
So what Sharat has highlighted, Samrat, is कि Ethereum is actually saying that कि यहाँ के बादशाह हम हैं.
So Ethereum definitely for the DeFi world, I had said the last time as well. Ethereum was the one which gave the world smart contracts. Ethereum is the one which gave the world DeFi capabilities, right? So it's not going anywhere else. What I see it is, as Sharat also pointed out, it's going to be the global settlement layer. And so imagine it to be like, just in common terms, imagine it to be like moving more towards B2B than B2C, right? So while individuals may not be transacting directly with the Ethereum layer, they would prefer going via the layer 2 solutions for both, transaction speed optimization as well as cost optimization. But eventually the layer 2s are also rolling up there. The layer 2s are also offering many, many more capabilities. I mean, Sharat brought up Polygon as well. Beautiful example of what all a layer 2 could do. And if they become the AWS of the Web3 world, look at what the token could do. for the holders. So, that's also something which the investors, and you said, the investors need to be more aware of what's going on. So I think that's also one critical aspect which the investors should see in a token, that where is this company which has created this token, it's heading, what is the vision, what are the products that they've delivered and they are planning to deliver. So Polygon had a clear roadmap set. They created some things, and the things which they did not create, they acquired companies to deliver that, but they still delivered it, right? So that's a beautiful thing which happened in layer 2. For the Ethereum dominance, Manoj, I can definitely say it is going to be the platform of choice for definitely for DeFi
Will you
and a
think
lot of other.
which is somewhere around 17.5%? Will you think that it can match up to a level, or it can bring this Bitcoin Bitcoin to its level?
So markets may so one is the tokens, the people who are holding tokens, that's one parameter, definitely a good parameter to look at. But then there are the other applications, how many applications are currently using that one platform.
Sure,
So Bitcoin
perfect.
is not a platform with an application will use, right? I mean, Ethereum is more of a platform which on which applications are built, and then those applications are driving
Perfect.
adoption. So I think that is going to be a magnifying factor for its adoption.
All right. So Sharat, we are
Can I
moving
add
from
one more
this.
point?
Yeah,
One more
please.
point to what Samrat said was, so even in these bearish times, right, if you look at number of unique wallet addresses adding per week on Ethereum, they are into thousands now, close to 30 to 40,000 unique wallet addresses, which reflect Ethereum. So it will be a function of what is the developer activity which is still happening on Ethereum. That will be another major driver, how a platform would flourish or how the adoption will play out.
Right.
So all
And
right.
I think sorry Manoj, just one point.
Yeah,
I
please
think
go
the
ahead.
last time, the ESG concerns are going away from Ethereum network. That's also a big plus for enterprise adoption. I mentioned last time also. So it's a clear win for the Ethereum network, where with the shift from proof of work to proof of stake, it becomes more carbon neutral. It becomes more environmental friendly, and hence the companies can go ahead and start deploying it.
Perfect. So Sharat, we are moving from this Ethereum 2.0 to a topic which is actually I wanted to understand about the growth of the crypto ETFs. So one of the most significant advances of the crypto ETFs is that they provide exposure to cryptocurrencies without the added cost of its ownership. So what do you think is the strategy for crypto adoption? And if you can just explain this for our viewers.
I think when it comes to a major or mainstream adoption of crypto, it will happen only through institutional participation, and these crypto ETFs will be enablers of that. So the same brokerage account, you can hold your stocks, bonds, you can also invest in crypto, right? So they're simplifying or making the use of holding crypto assets much more easier to even a layman or who is not a tech savvy or literate enough to hold crypto assets, right? So that is one more part, and it also gives a wider exposure of crypto assets. So you can have a fund which which manages your crypto holdings. It's linked to a index. So that's one more area where mostly high net worth individuals or institutional players will take that route compared to holding or having custody of digital assets on your own, because it comes with an added risk, right? If you're having a custody of your assets, you may not have the right skills to protect it, right? So ETFs will also take care of, let's say, hacking of those assets, right? Make it more simpler in terms of ensuring safety and security of digital assets.
Sure, Samrat, a quick view on this.
Yeah, this is an excellent way for individuals and institutions both to get into and dip their toes into the investment of cryptocurrencies. I do think there's one critical aspect which Shraddha highlighted, which is also on the security related to your holdings. How do you protect what you hold, because in the crypto world, it's a wild west, right? But at this time, there is also one more important aspect for the investors to look at it. What are the currencies? What are the tokens which are comprising of one ETF? So when you're looking at investing in an ETF, you should definitely go drill down deeper. It's just like a mutual fund where people are investing money, and then there are underlying stocks.
Sure.
So people should look deeper into ETFs as well.
So Sharat, you mentioned about institutional adoption. My next question to you is, Morgan Stanley in a recent report has said that increased trading volume share of the crypto institution versus the retail volume has contributed to the high correlation between the Bitcoin and equities. and also noted that the increased involvement of institutions, which you have already highlighted, which are sensitive to the availability of capital and therefore interest rate, has contributed in part to the high correlation between Bitcoin and equities. So in short, institutions are coming towards this crypto universe. At the time, you also mentioned about gold-backed stable coins. But there was a point when cryptocurrency used to follow this hedge against inflation, and it was having a hedge against inflation tag. But now slowly and steadily, as the institutional investors are coming in, they are losing it. What's your opinion on this?
So I think honestly, the narrative of crypto assets or Bitcoin being inflation hedge was flawed from the very beginning, because now it has been established that there's a very strong positive correlation between these two equities as well as Bitcoin, right? If there's a negative correlation between two set of assets, then you can treat other as a hedge against inflation, right? But since they're positively correlated, the narrative of inflation hedge doesn't hold any ground.
Fantastic. What's your opinion, Samrat?
So definitely the institutions which are investing money are more and more sensitive towards the returns that they're generating in the shorter and the longer term. So the various institutions which are coming in have different investment horizons, different targets for returns that they need to generate. I think they are looking at it from the point of view that this is a new avenue for their diversification. Which they have successfully, a lot of companies have successfully capitalized, definitely. But at the same time, I also feel that these are companies. So, for example, hedge funds. I mean, 2/3 of the hedge funds are going to fail. There's a big news all over that there are hedge funds now mushrooming only because of such risky assets coming out and people believing in these investments. So if they So if let's say, if you ask them to bet on anything, they would start betting on anything. I mean, that's also one big problem, right? You give them any risky assets which can eventually generate a return out of a bet, they will start investing there. So it's a wait and watch situation as far as I am concerned. But definitely, the ETFs have actually they are driving adoption left, right, center.
So Sharat, since we're talking about institutional investors, we're talking about Mota Paisa, it calls for a better regulation landscape. So my next question to you is, the Indian government has introduced taxation on digital assets in its 2022-23 union budget. So which has led to an optimism in the industry that it is on a path of regulation and clarity. So are we really talking about regulation and clarity, or are we talking about something else?
I think let's be hopeful here, and let's look at even the recent or to be announced, to be released crypto consultation paper will throw more light on regulation.
Sure.
Because we have taxation in place now. Now it makes sense for the government to regulate the industry rather than drive the talent outside the country, right? So regulation is the way forward, and let's hope the crypto consultation paper paves the way for regulation.
So we do understand and respect of what the government has decided on this. But Samrat, my next question to you is, a lot of entrepreneurs, as Sharat is very optimistic about the taxation part. So a lot of entrepreneurs who operate from India, but have registered their offices in more favorable regulatory geographies such as Dubai, or for that matter, many other countries. You operate from
Singapore, Canada, yeah.
Yeah.
So I'm and I can say this with confidence because I'm on the board of two companies. One of them is in Canada and the other one is in Singapore. Both have crypto models. So it's a happy sad situation. I would say on one side it's Indian guys who are innovating, creating new products and which are meant for the global stage. But at the same time, India is losing revenue in terms of taxation, which could have come from this company. People getting paid, etc. People are getting paid in cryptocurrencies. Also, the Indian. So it's not only so the current regime has put a tax, but that tax does not really take care of operations of a company, right? It's just on if you made money on speculation, you get to pay some tax. That was anyways the case, right? You were paying. So what I really do intend to see, and what I really would be happy to see is, if a crypto company is given the kind of welcome which they're getting in, for example, places like Dubai, where they are welcoming you with open hands. You've also been there recently. You would have seen the environment, which is so friendly and welcoming for crypto world right now. I would say, very basic example is I may still be, charging TDS. Okay, that's easy. I can get my accountant to do the TDS part. But are companies in India getting a payment gateway?
Sure.
The answer is no. So these things need to be sorted.
All right.
A lot, and so it will not only be the regulation for the crypto company. It will also be the regulation for the other companies supporting operations of the crypto company. For example, the payment gateway and the banks.
So, all right. So Sharat, my next question to you is: Samrat mentioned about happy and sad moments. So let's focus on this happy situation wherein you spoke about the consultation paper on crypto, which is almost ready. Will the government release it this year, or will it wait for the global consensus to come on common ground?
Right. If you look at the public statements of government representatives, right, so they are saying that we will look forward to how the regulation is shaping up globally. So we've seen some development in the US where some of the senators have already rolled out a bill with respect to crypto, right? Cynthia and a couple of senators as well. So we have a precedent now. There's already a bill in the US, let's say Congress for that matter. Now, we can't actually try and imbibe all the elements of that bill. We should be having our own approach, and crypto consultation paper can be a step forward in that direction, right? And so if you look at even stablecoin, so we have a precedent now. Japan has already shown how you can regulate it.
Fantastic.
So even in terms of stablecoin, right, we have a, let's say, a precedent or template to follow. For regulation also, I think US has already shown some way. Now it's up to us how we can fine-tune, tweak our model and make it more relevant to our domestic circumstances and move forward with regulation. We should not be losing this opportunity of becoming or playing second fiddle to countries which are positioning themselves as the next global crypto hub, Dubai for that matter. Dubai, Singapore, UK, they are fighting for positioning their country as the next global crypto hub. Why should we lag behind just because we are dilly-dallying on regulation? I think we should move forward and then even also position ourselves as the next crypto hub.
So, all right. So this brings us to our last segment, which is the rapid fire question. Samrat, you know the format. So let's begin with you. So my first question to you is very quickly. You have to answer in a line or so, so that we can cover all the questions. So my first question to you is: GST Council mulling 28% tax on Bitcoin and other cryptocurrencies. Will India levy GST on cryptocurrencies? Samrat.
Yes, on the services of buying and selling cryptocurrency.
What about you, Sharat?
Happy about it.
Yeah, agree with Samrat. So on services, they are, I think we might see a GST of 28%.
So Sharat, will the 1% TDS on crypto to kick off from July 1st, or you have a different idea about it? Will the government roll back?
I don't see the rollback happening. The government may rationalize it because community members are engaging with the government to move it to 0.01%.
Samrat, your quick view on this.
My view is it is going to be, it's going to take some iterations to get it right, because there's also a confusion around how do they calculate the gains.
All right. So Sharat, will we see a spot Bitcoin ETFs in 2022? What's your opinion?
I don't see it happening anytime soon, right? We might see a bill in the US Congress first, right? Once that is done, then definitely yes.
What's your opinion, Samrat? Will it come in 2022?
No.
All right, that's a flat answer. All right. My last question to you, Sharat, is: will we see more stablecoin collapse like Terra Luna? If yes, if you can mention few.
So a couple of them have already depegged, like for example, DAI for that matter, right? So algorithmic stable coins are prone to failures. They will depeg it and they might collapse as well. But fiat-backed one or collateralized ones have a promising future.
Fantastic. Your last take on this, Samrat.
So definitely algorithmic stable coins are under a scanner, and they will. So even if the investors are moving out, I think that's a sign of failure.
All right, that's it. Thank you so much, gentlemen, for being part of this interaction. Sharat, thank you so much. Samrat, thank you so much. You guys really spoke well about what is the future of cryptocurrencies and the way forward. We spoke really well about Bitcoin and the way forward, institutional adoption, ETFs, and what stable coins as a roadmap will look like. Thank you so much, gentlemen, for being part of this interaction and taking part in this interaction on Crypto TV. Thank you so much.
Thanks,
Thank you.
Anuj.
All right, that's all there is in today's interaction. This is Manoj Dara signing off. Stay tuned on Crypto TV to watch such interesting interactions. Thank you so much.